The economic entity assumption. This is Zach. Zach just graduated from university with a Bachelor of Business, and he has been working hard to save up to start his own consulting business. Zach is forced to rent a space far away from the city due to rising rent and living expenses. He is finding his daily commute to work to be very time-consuming and frustrating. His new business has not yet generated enough money to purchase any new assets. Zach decides to take out a loan in his personal name to buy a car for his daily commute and plans to record the purchase in the balance sheet of the business, as he believes that it is at business expense. Zach was very concerned about his personal expenses in setting up his business, that he was too busy and felt the need to not attend his lecture on accounting principles. Zach is unaware of the economic entity assumption, which is one of the main assumptions in accounting as controlled by GAAP. GAAP refers to the generally accepted accounting principles. It is the common set of accounting principles, standards and procedures that companies use to create their financial statements and use them to make business decisions. It is the same around the world. In order to understand the economic entity assumption, we must consider the different types of entities that exist. Zach is a sole proprietorship. For legal purposes, a sole proprietorship and its owner are one entity. But for accounting purposes, a sole proprietorship is accounted for separately from the proprietor's personal affairs and expenses. The economic entity assumption states the separation of financial activity among the business and the personal activities of the business owner. Put simply, this means that all the expenses incurred from the operation of the business and all the personal and/or home expenses must always be separated. This ensures that when all the financial information is recorded and communicated, there is no overlap between personal finances and the business's finances. Zach will not be allowed to record the loan to purchase the car in the balance sheet of the business, as the economic entity assumption determines that any personal expenses incurred by owners of a business will not appear in the financial statements of the entity. The only way Zach can record the car in his business's financial statements is if he purchases the car and contributes it to the business. If only Zach went to his lecture.